As credit perceptions evolve in the Philippines, TransUnion's Credit Perception Index provides key insights into how Filipinos view borrowing and financial trust in 2024. With rising economic uncertainties, many are reevaluating their relationship with credit, highlighting both opportunities and challenges for financial inclusion. Today, we are joined by Weihan Sun, Principal of Research and Consulting for Asia Pacific at TransUnion, to delve deeper into these shifts in the credit landscape. Weihan, good morning and welcome to Follow the Money.
Morning, Raine. Great to be here.
Thank you so much for joining us all the way from Hong Kong. Now, to set the stage, could you give us a brief overview of TransUnion's Credit Perception Index and its key findings regarding credit perceptions in the Philippines?
Sure, Raine. So the Consumer Credit Perception Index was developed last year by TransUnion, and the purpose of this index was to measure how consumers in the Philippines are actually perceiving credit. And especially with the population becoming more and more banked, we wanted to understand how consumers are perceiving banking products. And credit is a very important product within the banking journey for a consumer. So the key findings for this year is actually a marked improvement. The credit perception index grew to 69 from 65 in the prior year. And that's generally the average score that we've observed, which is a good sign because it shows improvement and acceptance from consumers on credit. Now, with good news, there's also some bad news. So for consumers who are unbanked in the previous year, who remain unbanked in this current year, their perception of credit is very low. It's around 39 from 53 in the prior year. So that, again, when you see a lot of efforts within the country in promoting further financial inclusion, you're likely to see that score actually improve in the following year. But right now, the unbanked population is not having a good perception of credit.
Weihan, your study did find that trust in financial institutions increased significantly in 2024. What do you think are the key factors behind this growing trust?
So again, Raine, I believe the financial inclusion drive that's occurring both on the government, the regulator, as well as the banking sector as a whole is improving perception for consumers because they're allowing more access. About 14% of consumers feel more comfortable, and 14% increase that is from the prior year, feel more comfortable borrowing money from traditional banks. About 11% showed improvements in terms of virtual digital service providers, and less so, about 11% of consumers actually decreased from borrowing money from friends and family. And that's because these lending institutions are allowing further access, which means consumers are feeling more trust with these institutions than they did a year ago.
Have you observed any differences in credit behaviors or attitudes between regions across Asia versus the Philippines?
Well, in developed markets such as Hong Kong, you're going to see a lot more greater penetration. But in Philippines, what we observed in particular is the growth in the number of people actually accessing credit products. And that's a good sign in a lot of aspects. If you look at the median age in the Philippines, it's around 25 years old, which means if consumers are getting access at a young age, they're really getting there in the early part of the journey, which allows them a long term to build their credit history. So getting early access to credit really helps consumers, especially with the country's aspirations of becoming an upper middle income country. Credit is going to play a significant role in many Filipinos achieving their financial goals. So it's a very good sign, an encouraging sign to see greater penetration of credit products in everyday Filipinos' lives.
Understood. Now, looking to the future, is there a vision that you have for the role of credit evolving in the Philippines? Are there any trends you foresee for 2025 and beyond?
So for 2025 beyond, we're going to continue probably seeing the trajectory we've seen in this year and the last year. Following the reopening of the region post the COVID pandemic, you're going to see a lot more rapid growth occurring. And we're going to see probably more growth in the credit card sector in particular, as with e-commerce picking up in the region, as well as the convenience credit cards provide to consumers. You're likely to see more consumers taking on that credit product. Also, the good caveat for credit card is really allows consumers to build their credit profile really quickly, as long as they obviously keep up with the obligation of repayment. The other aspect is consumers getting better credit profiles through using their credit cards correctly allows them further access to more traditional products such as auto loans and even mortgages. So we do foresee the credit journey and evolution of Filipinos growing as a result in the following year.
Thank you so much, Weihan Sun of TransUnion in Hong Kong, for sharing your invaluable insights with us today. It has been enlightening to hear how your data is helping Filipinos better understand and manage their credit. Thank you.
Thank you.